All right, everybody. I run a little late on the morning review video because I went and grabbed some early lunch or lunch. That's not early. It's 12:40. Um, Obviously, everybody knows what the trade of the day was. Um, but if you didn't catch it, the question is, how could you have caught it? Uh, was there a way to know to realize that it was coming? Um, and I believe there was. So. Also, I'll get into the fact that I broke uh, I broke a few of my rules this morning, and I'll tell you why. Um, but ended up being a really nice day. I made about $9,100. Not quite a five-figure day, but it could have been. Um, so this morning before the open, I made a mistake, and I didn't walk the dogs as soon as I got up. Because I got up right around 7 o'clock and I wanted to get on the charts. That was a mistake because I know the dogs are going to be getting up and needing to go out. So I allowed um, for a distraction to be in play. Um, I think uh, David said this as well in the live stream this morning. Uh, he had children in the house. Was getting very distracted by them, and ended up being down money before the open. I think you got some of it back. Hopefully, you got all of it back, David. But if not, no. Actually, I think I saw that he blew an account, so I don't think he got it back. Uh, and that's definitely a lesson learned. If you can't, if you're not going to have the opportunity to trade with no distractions, the best course of action is just not to trade. Um, People think they can stay focused on a screen, but when you got things going on in real life, it really does draw enough focus away from your trading that uh, you're bound to make some mistakes. It may not cost you big time, but um, it's going to cost you nonetheless. So before this morning, and I don't know if this was yesterday or uh, Friday, I had drawn the market maker circle because we were in this area, and I said in one of the lives to those that were here that if we inverted this 4 hour fair value gap, um, that to me would confirm we were on the sell side of the market, right? Well, yesterday we broke it, but then we bounced right back up into range. Okay. Um, but because if you look over, the entire chart, you see that, from way down here, we've had buy side for quite some time. Um, and it goes all the way down to here. And that is where, um, that's not it. It's this one here. Okay. Um, should fit in the screen, right? That's not it. Oh, because I drew it on a bigger time frame chart, I think. Uh, maybe. I took it off. Okay, I took it off. Um, on the 4 hour chart, this was the beginning of the move that went buy side until we broke structure, right? Um, so if you measure that out with a fib, Then your midline is down here. Uh, Geez, I've got another one in here. Let me delete that one, I think. No, that was the wrong one. All right, delete that one. Hmm. All right. So on the 4 hour, if we put a fib on this displacement move that broke structure, uh, from the moment we start pulling back and breaking structure to the downside, which is what we've done, broken several lows, and actually closed below this one. And we've inverted two fair value gaps on the way down so far. Uh, this candle still has an hour left in it, so we'll see if we invert these two gaps here or not. So, but if you draw that fib, uh, your 50% mark is down here. Um, and now that I can comfortably say we're probably on sell side of the curve, I would expect us to get down at least to the 50%, which would mean sweeping these lows and could also possibly mean getting into this fair value gap. And there's the 6-2 right there. So um, this is kind of the area I'm looking uh, for price over the next few days to get to. So right now I am short biased. We have confirmed, we inverted the first fair value gap from the liquidity sweep. We've now inverted the second, uh, well, actually the first, the second, and now the third. Okay, because we had one right here as well. Right, um, that was inverted earlier. Then we went back up to this inverted, and that's where we've fallen down. Um, so that's kind of my ideas on where price is going to be going. You know, we're going to be looking to get into discount pricing before moving higher. So, with that being said, how could we have caught the trade this morning? Um, and no matter what time frame you're on, um, you'll be able to see this. Uh, take this off. Okay. This was the start of the Asian session. Uh, we had just swept the highs, previous highs, at the end of New York. Asia pulled back to 50% of that fair value gap and then pushed up. Okay. Now, what I'm looking at is a range that we were in pretty much for all of Asia and London. And I started that range from the top of yesterday's to the bottom of the pullback at the beginning of the Asia session, which hit 50% of that fair value gap and it bounced. Well, we did go above it. So some would say, well, why isn't that the range? Well, I'm counting this. This could be just another liquidity sweep to come right back into range, right? Which is exactly what it did. Um, we swept the liquidity from here. We pulled back. We couldn't break the low. So we pushed up, barely broke range, and then pushed up again through London right into the New York pre-market open. And we failed to break the high. Okay. Now, this is just classic manipulation on a higher time frame. We break the range to the top side, come back into range, we go back up and either have a retest of the manipulation move or a fake out breakout above it that then fails and comes back into range. So this to me is a longer time frame manipulation move. Um, let's just see what that looks like if we go to the 1 hour, right? Um, you know, yeah, more or less, uh, 30 minute looks a little better. Sweep the high, can't break the low. Try to sweep the high again, can't do it, and down we go. So that obviously was the move of the day. You could have seen this basically on any time frame if you had put that first range on uh, from the Asian session. Okay, going. Okay. Um, so that absolutely, if you had caught the retest of the manipulation move and took it on the inversion of the last fair value gap to the upside, you would have entered right below here, right around here. And if you had two contracts on and you were able to hold through that much profit, you would have ended up with about a $26,000 day. Um, and honestly, nowhere through here um, did you get an indication to close the trade. Uh, this would have been tough to hold through to get down here, but if you look to the left, you will see that that is a low. Um, I did kind of expect this fair value gap to fail. It was a bullish, and I've turned it into inverted. Uh, and we've gone through it, we've gone through it, and we've gone through it. So I'm just taking that one off now. It is no longer of consequence. All the orders in that gap have been traded through several times. Um, but this is still the important one, even though we've closed below it, and I'll need to find another one. Um, but if you were looking left, uh, when that move happened, you would notice this low right at this fair value gap. And that's once we inverted this one, that's where I was looking to go for liquidity. Um, so I did catch part of that move down this morning. You saw that in the morning results. Up until that point, I had not broken any of my rules. But once we got down and we swept that low and I moved to the 1 minute and started looking at it, well, again, a very nice market maker model, sell side, sweeping liquidity into a 4 hour fair value gap, looking for the reversal, right? Um, and that reversal happened uh, at the close of this bearish engulfing candle here that engulfs all of the highs from this range and closes this fair value gap. Okay. Uh, it was a very small fair value gap, I'll give you that, but it is a fair value gap nonetheless, right here. And we tried, almost closed it, tried again, almost closed it. Come, come back down to sweep a low, and off she goes. So at the close of this candle, I was in 5 contracts. The very next candle pulled back, and as soon as we broke the high, I added 5 more contracts. As soon as we broke the wick, I added 5 more contracts. And as soon as we broke above that fair value gap, I added 5 more contracts. So I was in 20 contracts at this point. And does that look dangerous? Yes, it does. Because I'm adding 5 contracts just as soon as I'm hitting this fair value gap. Okay. but I'm watching price closely. Closely. I'm not going to let that 20 contracts go back on me very far. But this candle continues on, closes, and we don't even pull back into it. Okay. The smallest of wicks to create a fair value gap. And we go on with the next candle to invert this fair value gap. Now, all I was looking to do was take this to the previous high. Okay. I'm at 20 contracts here up to here. And I ended up my day with, I started the day with $4,200 in profit on my paper trading account, and I ended the day up $9,100. So, and that was the trade that made the day because I missed the opening trade. Obviously, the opening trade would have been uh, twice as much and would have been a lot less stressful because I would have been in two contracts all the way down and would not have had to have been taking a 20 contract trade uh, to get $5,000 up here because I had already made 4,000. Um, so I can't remember if I took it off here or here, but somewhere around here is where I took it off. Um, and honestly, never had any drawdown. Once I was in 20 contracts, it just ran. It did pull back some, um, but it wasn't enough to worry me, and it took off. So this is where I broke my rules because obviously this was after 10:30. Um, and with that in mind, I have got to clarify. I said I was only going to trade between 7:30 and 10:30, but Casper has said it. A couple other really good traders have said it. Yes, you've got to have a plan. You've got to have rules. But another very important thing that very successful traders do is that they will bend those rules or break those rules um, when their intuition and their market experience is telling them that you're about to get a move that you need to trade. Okay. And this was that move. It just didn't happen inside my trade window. Okay. I followed my plan. I followed my trade plan. I was just outside my trade window. Now, I also did put on bigger size because of the dump off in the market and the news that we had today. Uh, well, there's a couple things going on. One, Iran uh, is expected to attack Israel. That's obviously going to hurt the markets. The possibility of the U.S. having to get involved in this war. Um, secondly, uh, I believe the dock workers strike uh, started last night. I haven't looked at the news, but I think it was supposed to start last night or it was starting this morning. That is going to severely hamper the economy until that is resolved. And at the cost to businesses in the U.S. at $5 billion a day, uh, that that's definitely not going to help the markets until that gets resolved, and then probably take a little while to get that congestion out of the markets or out of the ports and back into the markets. So with that news, I was not expecting, I didn't want to take this all the way back up to fair value gap. I just wanted the previous high. And that's why, you know, I took such a large trade knowing that we're going to bounce off here and more than likely we're going to at least get close to the previous high. Okay. which was also getting into that inverted fair value gap, right? Um, and I deleted it. I shouldn't have because basically I closed the trade at the very bottom of that inverted fair value gap. So it may have been right down in here somewhere that I closed the trade. I didn't even get back to the previous high because if the inverted was going to hold, it could possibly touch the bottom of it and then roll over and go down even further. But the power of these 4 hour lows into a 4 hour fair value gap is just super high probability of a bounce of some kind. Okay. And when you have that high probability of a trade, I'm willing to go bigger size, start with a bigger size. Instead of two, I started with five and just add to that trade real fast and then let it get the push that I'm looking for and then just close the trade. Okay. So there was a reason I broke my rules today because this doesn't always happen inside your trade window. But when it does happen, you need to take that opportunity. Um, this was exactly the same setup um, that, what was it? Was it Monday? Yesterday? Yeah, that I took yesterday for a $4,000 win. Okay. And I think it was over here somewhere. Or was this one? Shit, I can't remember. Monday. There it was. This was it right here. Um, the first trade of the day. That's the one I took for $4,000 and I was done. Okay. Um, is that four? No, that wasn't 4,000. That was 2,000. $2,000. And I was done. I'd already made $2,000 on a previous day. I guess it was Friday. I don't know if I still have that uh, marked. 'Cause I don't think I started saving the trademarks. In fact, I need to delete that. These were trades that were available that I just didn't take. I only took one trade on it yesterday, and it was this one. So, we'll leave that, I'll lock that in. Okay. Um, so that was yesterday's trade, and then um, I need to mark today's trades. Shit. Um, yeah, I'll get that done. Go back through and get them marked up. So that's the morning review. I mean, obviously, after that big of a move, what can we expect for pretty much the rest of the day? Consolidation. Uh, we might get another move in the afternoon, either lower or the manipulation move up back into range. We'll just have to see. But at this point, um, on the 4 hour, I am uh, still bearish. I am now bearish. I was bullish overall in the market, but right now, I do believe uh, we we could very well go sell side here for a few days. Maybe get back into this area down here into the fib, at least into discount pricing, and then maybe bounce back up after that, depending on what the ports look like, um, and what happens when Iran attacks Israel and how involved we may have to get in that. So definitely we'll be watching some headlines in the news over the next few days. The port shutting down, costing the U.S. economy about $5 billion a day, and a war we may actually have to get into, involved with, is definitely going to make some changes in the stock market. and people are going to be watching that news very carefully. So, um, yeah, that's it for today. Today had a very, very uh, good possibility of making money, and it turned out that you could have made a rather large amount of money if you had caught that trade. So going back through on a daily and weekly basis and looking at the biggest moves of the week and of the day, and seeing if there was somehow you could have caught that move, is extremely important. It's why I do it every single day. Uh, so you'll only get better if you put in the work, and I intend to put in the work every single day uh, to improve my trading. So that is it for the morning review. Uh, keep grinding, keep working at it. You know, if these videos are helping, I hope they are, then that's great. If you're not trading like me, that, you know, maybe there'll be some little nuggets in there you could catch uh, to help with your trade plan. But, in 2 days, 3 days, I've made $13,000. And, that happens. You can only make that kind of money, the big money. I mean, 9,000 of that was today when you get these big moves, right? I mean, that was literally um, a 458 point drop uh, in 2 hours. Unfortunately, I didn't catch the drop. I caught the bounce. But either way, you can make really good money either direction. So that is it for today. It is time to get some laundry done. No freight at the yard uh, today, according to dispatch. Hopefully, I'll be able to get something by this afternoon, uh, but we'll see. All right. I will see everybody tomorrow morning on the trading floor. I will be live again, and we'll see what we can do. I am I am starting to see that I'm still seeing the market well. I'm still reading the market well. I'm still choosing my liquidity draws uh, and stuff like that very well. So I am gaining more and more confidence um, to be able to go in and trade uh, my funded accounts again for a little bit. Uh, and that was the biggest thing, after making a big amount of money. I'm gonna draw this on just a little few more minutes. After making the amount of money I did in 3 weeks, uh, you start to get really nervous. I did, uh, because you don't want to lose that money. Certainly, um, you don't even want to lose a big portion of it, but you start to get a little nervous. And as a newer trader, just starting to become consistently profitable, sometimes I wonder, did I just get lucky? How did I actually make $60,000 in 3 weeks? Did I just get lucky, or was I reading the market well and trading well and putting on size when I needed to put on size and holding my trades uh, to the majority of the profit that I could be taking on that trade? All of that stuff. And so instead of just continuing to trade evaluations or funded accounts, I made the decision for myself to go into a practice account, a paper trading account on TradingView, and just trade that for a little while. And I'm still in that process. I am gaining more confidence that that $60,000 was no mistake. Okay. It wasn't luck. I'm still reading the market well. I'm still making money. I'm putting on size when I need to put on size. I'm holding my trades to targets. Everything, it's just everything's working out and trading is still going good. Um, I did blow uh, one of the three funded accounts in Apex before I went to the practice account. I blew a couple more evaluations, and that's what gets you to start wondering, hey, was that $60,000 just luck, or am I doing something wrong? And there may have been a little bit of overconfidence there when I blew that third funded account, and blew it pretty quickly when I started trading it, and then a couple of more evals. So there may have been a little overconfidence there. So when you get into those positions where maybe you're a little too confident, or you're wondering if you just got lucky, or how to, is everything going the way it should be? Um, just stop trading anything that costs you money and move into a practice account and trade for a few days to a week in that practice account, you know, and don't really change the way you're trading. Just trade in an account that's not going to hurt you, um, and trade your plan and take it slow. Don't don't let the fact that it's a practice account throw you off. I mean, even on that push up where I was in 20 contracts, I mean, there were times when I made that 60,000 that I was in 30, 35 contracts. So I was still smaller size than what I was trading, making that money, right? So even on the high probability trades, I'm still using less size than I did then, which was my goal, reduce my size a little bit. On the trades that I'm not sure of, I'll enter with two contracts. You know, Not that I'm not sure of them, they are my trade plan, but they're in a position in the market where I'm not sure, you know, what I'm looking at. Am I looking at a big move, or am I just looking at a move to a previous higher low to make my $2,000 for the day? Um, and it's when you get in those trades, like I would have been in this morning, and you just displace right through the previous low, that you hold that trade for a minute and see what happens. And then next thing you know, you're sitting there with $25,000 profit in your pocket, um, on two contracts, and after that big move down, coming into a very key level, I'm expecting a bounce. I don't know how big of a bounce because we just had a tremendous down move that could have kept going. Um, but I am going to trade that bounce, and I'm probably going to trade it with a little bit bigger size because I know I'm not going to get as big of a move, and I'm going to take that size on and scale it out rather quickly, um, when once I'm in profit. Uh, so, have a trade plan for different scenarios, uh, and work those plans. I mean, you know, I have my trade plan for uh, a manipulation move out of range to go the other direction. I have a trade plan for a bounce off of a major level. Uh, if that bounce turns into an actual reversal, then fantastic. I can add to that trade along the way. So, uh, but yeah, everything's working out. Um, I am actually planning on starting a straight to funded account with Tradeify. I like their rules better than uh, fast track trading. Uh, I I like their CEO better than fast track trading. Uh, I think he's got some a really good business plan. The difference between those two, and I'll just let everybody know that might watch this video, um, is that uh, the CEO of Fast Track Trading was asked at one point, did he plan on copying his best traders, uh, trade copying them? And he flat out said no. Um, to me, that is someone who is looking to make money um, off of failed traders and then taking the small percentage of the good traders' profits to keep sustain the company. Whereas uh, Tradeify is looking to move traders into live accounts fairly quickly, as long as they show consistency. And then they are looking also to copy trade their best traders for income, as well as, I mean, obviously every prop firm's going to make money off of failed accounts, right? Um, where they never actually have to pay anybody out because somebody's going to buy the account and fail it before they ever reach payout. Um, but his plan to uh, move traders into live faster, uh, I won't say faster than most companies are looking to, but you know, they've got a real good handle on data. They're and tracking all that data so that they can copy trade their best traders. Um, and he went so far as to say, if they have a really good trader, they're not just going to copy him at 1 to 1. They're going to copy him at 2 to 1, 3 to 1, 5 to 1 if it's a really good trader, which will, really get their profits up there. Um, I just, I like their business plan. He went on with Austin Silver um, on a podcast. Anybody thinking about trading with Tradeify, I would suggest you go on and find that podcast on YouTube. Um, it's the Daily Trade Show or the Trade Show or uh, crap, I can't remember, but it's Austin Silver from ASFX, and it was a really good podcast. Brett Sembo went through uh, the whole history with this. They've been working on it for several years. They just this was the time, you know, they almost released it right before my future funding got shut down. Um, so they paused it just to make sure, that wasn't going to spread over into the future space. Um, and then Scott opened FTT as a instant funding company. So they thought this was probably the best time to go ahead and open up Tradeify to compete with Scott. Um, and you know just how things are running so far. Granted, Tradeify is only about a month and a half old. I think more people will choose Tradeify than FTT once the word gets out about Tradeify and they start growing, just like FTT did because they're an instant funding company. Uh, I think once traders actually start reviewing the difference between the two, the bad traders will go with FTT. There's going to be some good traders there. I already know of one of them. Um, there's going to be some good traders there, but I think a lot more of the bad traders will go with FTT because it is a little less expensive uh, for more drawdown. But I think the good traders who actually care about the goals of the company, how the company's run, who's running the company, um, I think those people, once they do the research, you'll find a better quality of trader over at Tradeify for the most part. So that is it for me today. Uh, I wish I could go play some golf. It's an absolutely beautiful day for it, uh, but got laundry to do, and hopefully we'll get a load out of here this afternoon. So until tomorrow, I'll see everybody on the trading floor then. Right around 7 o'clock, I should be jumping on live if anybody wants to stop in. David and Mizzy have been pretty regular in the live session, and I appreciate you guys being in there. Hope it's helping anybody else, even if you don't trade the way we do. Um, come on in, take a look around, show us what you're doing, and I'll see everybody then.